All right, you're live, Johnny Mo, David.
We're excited. Thanks for having me back.
Yeah, man, everybody, hey, welcome for joining us. This is one of my favorite things to listen to because we talk about some analytics. And if you're not looking at analytics, if you're not looking at numbers, if you're not looking at what's going on with the markets and things like that, you're missing a whole, you're not acting like a manager of your business. And there's nobody better to come here with than the man himself, David Childers. And he is going to share some great market data, market research, and they put it out all the time with their company. David, welcome. Tristan, thank you for having me. And I got a cat that wants to be on TV.
That is great. Well, thanks for having me, Johnny and Tristan. I'm excited. I always enjoy this time where we get the chance to talk a little bit about the market, talk about the economy, talk about things happening, and just have a discussion, you know. And Johnny, back to your point, I think, facts today in the market are what matter, and that's what we always want to try to stick to.
Yeah. And what are you seeing out there right now? I mean, we hear good things. Inventory, I know, is a big thing everywhere.
Sure. Yeah. We can talk about that. It is the challenge to our business right now. You know, I pulled a few things for us to talk about, maybe starting out with the overall economy. You know, Friday, we got to look at unemployment. Tristan, you asked a question there about some of these layoffs. We certainly can talk about that. Talk a little bit about real estate recovery, give you some, our team built kind of a snapshot dashboard, if you will, of a small tracker on that. So we'll cover that and then talk about the issue of inventory too. I've got a good way to display the challenge to clients that you're talking to. So I'll go over that, but let's hop in. Let's talk about the economy. Let's look and see what we have. And as always, drop your questions in the chat. We'll try to get to those. Tristan, Johnny, if you guys will watch those, certainly answer those. You can ask any question you want, as long as I reserve the right to say I don't know. So
you're fine.
I'll hop in and do that. Yeah. I'll work hard to get the answer for you if I don't know, but I may not know everything. All right. So couple of quotes to kind of kick us off here. I brought this from the Wall Street Journal, and this really talks about consumer confidence. That's what we want to see in the overall economy. Consumers becoming more confident in what's going on. It says consumers are growing more optimistic about the state of the U.S. economy. The Conference Board, a private research group, says in its index of consumer confidence posted its biggest increase since April 2003. So we're seeing consumers go, you know what, we're seeing things turn around. We can, do business. We can transact the things that we want to transact. And that is a good thing. We want to see that continue to happen in the overall economy. The Consumer Confidence Index increased to 101.8 in September. Economists polled earlier by the Wall Street Journal expected the reading to stand around 90 in that. So we're seeing a little bit of an interesting thing happen in the economy is we're seeing readings above where experts expected, and that's a good thing. I think there's that gives us a better feel of what the consumer is feeling like. Certainly our business, for the last several months, in large part, has been insulated from from the effects of the pandemic, the coronavirus. A lot of businesses haven't, and we certainly feel for them. But we're starting to see consumer confidence come back, some big jumps there. One thing we always look at KCM is the change in consumer spending. So you see across the country, some blues starting to form. Now this is compared to January 1st. Where are we at relative to consumer spending? You see the blue states there are ahead or over where we were in January, and some of that brown-ish color that is somewhere between 0 and 10% down from where we were in January. So making good strides back up. If you remember the bar graph that I showed a couple of weeks back, where we took a big dip back down, in consumer spending in April, and kind of have worked our way back up to where a lot of states in very close range relative to consumer spending to where they started the year off. So very positive things relative to the economy that we're seeing. And that bodes well certainly for real estate and for businesses in general going forward. We want to see the entire economy, come back and people have their jobs, livelihoods back and be able to provide. So good things happening there. I mentioned on Friday, the employment situation report came out, which is, the unemployment report. I clipped a quote from that that I wanted to share with you, and I'll stop sharing here in just a second. We can discuss it, but it says in September, the unemployment rate declined by 0.5 percentage points to 7.9%. And the number of unemployment persons fell by 1 million to 12.6 million. These are people receiving unemployment benefits. Both measures have declined for 5 consecutive months, but are higher than in February. So if you want to kind of say, okay, where were we in February and how does that compare to today? Well, unemployment 4.4 percentage points higher, and those on unemployment 6.8 million more people collecting unemployment. So not back to where we were. I think this unemployment report was given a maybe a lukewarm response by experts and by analysts, meaning it needs to continue to come down. We want to see more people get back to work. If we look at the filings just graphically, we've been hanging out for several weeks at 1,900,000. We dropped this past week to the 800,000 range, and certainly hope that that gets better and better. But economically speaking, we look across the country, consumers are starting to say we're more confident. People are getting jobs back, but we want to see those return.
I like that, dude. So tell me, with those numbers decreasing, how does that new report coming out with airlines having to cut a whole bunch of people, Disney cutting a whole bunch of people, and probably a couple of other companies, I don't know, cutting people.
Sure.
But how does that affect everything in that graph? Is that going to dramatically increase it? What is your take on it?
Well, I think I definitely have a perspective on that. I think so let's deal in facts first of all. Let's look at last month's unemployment report. 1 million more jobs were added than we lost in the economy.
Wow.
So let's just pause there. So when you see United or Disney or these companies that are struggling right now, that are service sector led companies laying off I'm going to call it tens of thousands of people. Yep. You read that and it's shocking. You feel for those individuals. If you know somebody that works in the airlines or works in one of those businesses, you go, wow, we certainly don't want to see that to people. And then I would remind people that last month, 1 million more jobs were added. So 30,000 jobs may go away in a particular category, but you have 1 million added. So it just offsets it. I think again, a lot of these headlines are designed more to get your attention and get get eyeballs on it than they are to give you the full accurate picture. So we're still seeing an economy that's adding more jobs than we're losing, which is, we want to see that. That's a good
I like that. Do we know what sector they're being added in, or no? Or just in general?
I can bring the breakdown certainly of that. This has been a service sector led recession. So we've seen a lot more of those jobs come back in the service industry. But certainly I'll break that down and show you over time where those have come back. I don't have it today. But businesses that are dragging I don't think we're going to see, airlines come back tomorrow and everybody hop on a plane and want to go somewhere, or bowling alleys or movie theaters or things that people go, you know what, I'm going to wait and see about that. I think we're going to see more of that is my point. But
you mentioned movie theaters, and I was just reading about whatever the big cinema company is that owns like 1 billion of them across the world, Cine conglomerate. But they're talking about shutting down tens of thousands of theaters right now just because of the situation. So you got to think, okay, this is great, but the long-term effect, is going to be, we can't predict it, what that's going to be. But hopefully, we're able to rebound from that pretty quickly. Cruise industry, it's interesting to think too. Yeah. We definitely have a lot of U.S. citizens or whatever, taxpayers that work and contribute to that. But a lot of the people on the boats, they're reporting to different countries, right? They're from different countries, so they don't have to report to America. So if they lose jobs, the industry is being hit, but only a fraction of it's being reported because only a fraction of it counts towards American jobs. Does that make sense?
Yeah. I think we're going to continue to see, some of these businesses that are going to be heavily affected. You're going to see more of that. And again, I would go back to the overall economy. We're seeing consumers their confidence return, spending return, and that's going to fuel businesses. And if there's any bright spot in that, is that jobs are returning at a faster pace than we're losing them. So not to diminish the impact of those individuals, because it's very real to them, but that's the way I would look at that.
I'm gonna throw you a curveball here, if it's okay, and get your opinion on this.
Sure.
And there was a post in the other day, and it was talking about lumber prices.
Sure.
Somebody was saying, "I wait to buy lumber." I'm like, no, I don't think it's going back down. And somebody came in who is married to a builder, and she said, several months ago, maybe March, I had a lumber package delivered, and it was 18,000 and change, somewhere around there. I just had the same package for the same plan delivered, and it's 42,000.
Yeah.
So if there's any place I think that where the inventory choke point might be, it's new construction. The price has got to go up, and
Sure.
how far up until you're too far up and the consumer won't pay anymore.
Sure. Yeah. Now, is there a question in that?
The question is, do you think that's caused by inflation? Do you think that's because obviously it's a supply and demand effect, but do you think that's because just, with the fires that are going on, that the supply is diminished? Is new construction taking off that much around the country?
Yeah, our team's followed this and done an amazing job. Jamie on our research team has followed the price of lumber and the story, if you will, around that. A couple of things. We've seen the price of lumber double since the pandemic. A frame pack, we were with a builder a couple of weeks ago. The average number of builders association is using is $16,000 an increase in price. Is that going to be passed on to the consumer? Yes, is the short answer to that. The challenge right now with lumber is twofold. One, during the shutdown, many mills shut completely down, and they are not back to 100% capacity. That's the first issue there. The second issue is builders are seeing white hot demand. So we have undersupply, and we have everybody wanting to get their hands on lumber. Not only builders, but do-it-yourself contractors, their business is up, and people saying, hey, we're going to make an addition, we're going to do something to our home now that, pandemic is set in. And I don't believe, according to what we've seen in the last few weeks, if there's been something, I haven't seen it, the impact of the wildfires to lumber, because literally the builders have said it's not safe for us to get in and assess it right now. And so I think there's still more to be answered in that question, but it's largely due to the mills, and it's largely due to demand, the lumber issue. And even just to give you just kind of an understatement, let's this is a good transition into our business, and I'll show you something that kind of backs that up. And this is kind of a snapshot here, if you can see it, of year-over-year key metrics relative to our business. If you start off at the left, showings, according to Showing Time, year-over-year showings are up 61.9%. So still people coming out saying we want to look at a home. Purchase apps up 22%, pending deals up 24%. Existing home sales up 10.5% if we kind of work from left to right. And then, Johnny, the question you just asked, new home sales up 43% year over year. So that demand for those new homes is through the roof. And the issue is found on the right-hand side of this graph in inventory. Existing home inventory down 39%. New home inventory down 33%. So,
and that's what's driving the 33 offers.
Yeah, exactly. And I'll give you a way to look at that here in just a minute of why we are in a challenge. But yeah, we're seeing a lot of demand there, and seeing inventory being the challenge to it. NAR put out over the summer a housing market recovery index. We've been following that. You can see on the left when we dropped off in March with the quarantine, and we're now back above, where we were when we dropped off. Certainly a V-shaped recovery in housing now in the overall economy. There's economists, the majority of economists surveyed by the Wall Street Journal would say it's in some form of a V. If it's, it's really the question of the angle of the recovery, but certainly looking at a V there. Mark Fleming from First American, who we follow, says, I think it's sustainable, meaning housing, It may not grow as quickly as in the recent months, which have sort of been a recovery phase from the spring. There are some long run fundamental dynamics that are very positive for the growth of the housing market. So again, going back to your point, housing doing very well through this, new home construction doing very well, causing supply and demand issues, even beyond lumber. There are issues in getting hands on refrigerators and things like that builders are seeing as well.
Mm-hmm. Interesting stuff, man. And it begs the question to me is, we're seeing the prices go up.
Mm-hmm.
We're seeing the cost of new construction go up. Are wages going up?
Absolutely. Affordability by and large is a combination of two things: wages going up and costs being driven down. So we know low interest rates are driving costs down. You and I were talking before we went live here about a friend of yours that had refinanced and was able to get a great rate on a home. And by and large, the information relative to incomes is that incomes have been growing. So affordability actually improves through that. We did I believe it was last time, Tristan, remind me if that was it, where we showed the slide of financing $250,000 a year ago versus today, and the affordability for the average consumer, even taking into account appreciation over the last 12 months, is still better. So a lot of people look at, the cost of the price of a home when they need to be looking at the cost, and the cost certainly we know is very affordable due to low interest rates.
Yeah.
That's a good point, dude. So what else are we seeing in regards to the market a little bit more into the future? Anything that you can tell us more towards next year,
Mm-hmm.
spring-ish time? Because the number one thing when we talk to our clients
Mm-hmm.
is this: well, the market might tank next year. I don't know what's going to happen with the elections or who's going to win, all that. No matter who we talk to, that's in the back of their head. So
Sure.
Do you have any data that shows that the market's going to continue to remain steady or anything along those lines?
Yeah, I think there's a couple of things there. You talked about a lot. We've talked at Keeping Current Matters about the impact of the election on real estate. We talked about this, I think, what was it, a couple of weeks ago, or maybe 4 weeks ago, Tristan, where I went through historically what has happened. You can go to Keeping Current Matters and go to our YouTube channel and see that information. If you have somebody that's concerned about that, the market tanking, I think that I would ask, why does the person feel like the market's going to tank? Is there a particular reason, Tristan, you hear people say that?
No, they're just like, well, why am I going to purchase right now? It's just, I don't know what's going to happen after the election. It ties both together, right? They have this fear that something will happen after,
Mm-hmm.
and that prices will go down, right?
Yeah.
That's the fear.
Yeah. The thing I would say is when we look at experts are projecting for the next 12 months home price appreciation purely based upon supply and demand for that supply, low interest rates, and the positive momentum behind housing right now, and the number of people that want to buy a house that just simply can't find a house right now. I mean, I would say, for people on the call today, even in the chat, what are you seeing as far as demand? So I would lay that out relative to how people are, how your local market is doing. What are you seeing happening, and share that with people. Now, there's always, I don't know if you remember the quote, and I can bring it back in here. I'll give you perspective on this, if you'll bear with me while I pull this up. You want me to go through some election stuff real quick?
Definitely, man. I just threw in the blog there. So people, if they have any questions, they could just go into the Keeping Current Matters blog.
Yeah. I'll show you some election stuff real quick. This may help. So typically, this is historically what happens in an election year versus a non-election year. On the right, you see non-election presidential years, and this is November versus October. So if in October we sold 100 homes in a non-election year, we're going to sell 90. We're going to lose about 10%, 9.8% of that volume just in seasonality. In an election year, if we sold 100 homes in October, we're going to sell 85 in November, meaning that we see a little bit more drop off and people kind of going, you know what, I'm going to wait and see how this all shakes out. I'm concerned about the election. I'm concerned about how people or what may happen during that. And I think we live in a time where that is certainly the case. Now, I would say our business is different than, and I've used this example before, different than the restaurant business. If a restaurant's closed on a Friday night and you don't get a chance to go sit down and have dinner there, that restaurant loses that business. You still eat at home, you still get a meal. In our business, if somebody chooses not to buy in November, that doesn't mean they're going to make a decision not to buy a home. That business just gets pushed out. And here's the reason, here's really why we have to stay focused on that. If somebody were to say, hey, do you think, volume's going to drop off in November? Probably so, due to people being, concerned about the election. But what drives home purchase is this, coming from the BTIG Home Builder Report, that they're referring to the election. This may indicate that potential home buyers may have become more cautious in the face of national election uncertainty. This caution is temporary and ultimately results in deferred sales, just like we just talked about, because the economy, jobs, interest rates, and consumer confidence have far more meaningful roles in the home purchase decision than a presidential election. So is it dominating everything right now? Yes. Is it on the top of everyone's head? Yes. Is consumer confidence coming back? All-time high, what we just saw. Are interest rates in a good spot? Best we've ever seen. Are jobs coming back? Yes, 1 million jobs were added last month, more than we lost. So I think fundamentally, as you can stack, this is what's happening in the market. You can help people understand that. Now, I think even in that, we're going to still see some people say, I'm going to wait. I'm going to see how this all shakes out, which is very normal in this market and in the world that we live in.
So with that, then let me add or ask you one other thing that we've covered in the past, but this is just so those people that are listening in.
Yeah.
What happens to, and you showed this at the beginning, but what happens to all those homes that actually end up going into short sales or foreclosures? Because I have somebody here asking, currently 17% of all FHA loans are in forbearance nationwide. That's not going to affect the market? Question mark. I mean, what do you say on something like that, David? I know what I say, but what do you say?
So the question is, are the number of loans in forbearance going to affect the market?
In general, yeah. Tell me.
Affect is a very it's a very open-ended word, right? Like, are we talking? I think what the real question is, are we going to see a big effect in the market? Now, I would argue, let's go back to where that question originates. The question originates, in my opinion, back in 2008, where we saw a flood of distressed properties come to market. Now, we are fundamentally in a different market today than we were back in 2008 with regard to inventory. We were in an oversupply situation there, where today we sit at a historic undersupply. So it's the first thing you have to understand. The second piece is, when you look at forbearance is dropping, okay? Now, the good news about forbearance is it was the vehicle given by the federal government to weather the storm with regard to housing during the pandemic. Now, in that, the CFPB has allowed for people to extend forbearance for up to 360 days total of forbearance. Now, the question is, when we get, let's take worst case scenario, if somebody is in trouble, they extend at the end of that 360 days, are we going to see foreclosures? The quick answer to that is yes, we will. Are we going to see a flood of foreclosures on the market that's going to put so much supply in the market that prices drop? Not likely. And there's a lot of data to support that. The first issue is we know that across the country that equity in homes is extremely strong. There were a lot of lessons learned back in 2008 that people said, you know what, we're not going to go through that again. So if somebody is in trouble, there's a large percentage of those people that have options. If a home in your market, is in the, I'm going to say in the $300,000 to $400,000 range, depending on the average price point of who's listening and what a home, were to start out in your market for, and it went on the market and had equity or has gained equity in the last year, there's a good chance somebody could sell that home, put some money in their pocket and walk away. Do we want to see that happen? We don't, but it does happen in our business. Are there going to be a percentage of people that have, insufficient equity to do that and have to do some type of distress sale? There is going to be, but I don't think we're looking at anything like 2008 in any shape, form, or fashion, just due to the differences in the market today versus back then.
Well, that's our job to tell that story too, so that when people come and say, hey, well, there are thousands of people being laid off, especially this month, right, with what's happening. You also have to have the data and say, well, look, these are the amount of jobs that are also being put in place. And these are the stats that show that most of the homes, I think the stat, David, was like over 70% or at 70% of all homes have, all mortgages have equity. Was that the stat?
42.1% of homes in this country are owned free and clear, meaning they don't even have a mortgage on them.
I love that.
And then 58.7% of homes have at least 60% equity.
All right.
This is from John Burns Consulting. 90% of homes have at least 10% equity in them today. A lot of that is due to, there's a couple things happening in the market. One, we're seeing appreciation grow in the last year, just due to the dynamics in the housing market, low interest rates and lack of supply. Prices are rising. That is true. When prices rise, that means increased equity for people. So if there is a silver lining to today that we didn't have in 2008, is with rising prices, increased equity. Number one, it gives people options. And if you are in a tough spot, you could transact the sale of your home and put some cash in your pocket, and hopefully for your family weather that storm. Now, the bigger issue, I think, and Tristan, you brought this up last time when we talked, is the Wall Street Journal published last week that there are delinquent loans in this country that aren't in forbearance, meaning there are people that don't know. I don't know the answer to that question, but it would lead us to believe that they don't know about their options of forbearance. And so I think our job through this is to help educate the public and say, hey, if you are in a situation where you're having trouble making your mortgage payment, let's talk. Not that you can necessarily help them, but you can give them the advice. Hey, reach out to your lender, see what options they have for you. Or if you're in a tough spot, let me help you sell your home in this white hot market so that you can provide, for yourself, for your family, or whatever the case may be.
All right. Good point. Guys, I love that. We answered all the questions on this end. We addressed them on Facebook. Johnny Mo, anything you want to add, buddy?
No, I think everything that I wanted to hit, we hit right on. I would love to, anybody listening to this, have you seen any election worry? People, what you're seeing out there in the world, are people holding off until after the election, what that is, because we don't have that data just yet because, well, time hasn't passed to create it. But are you seeing people hold off? Any reasons or anything that you're seeing out there? It's the only thing I'd like to see.
I love that.
Yeah.
I just answered another question.
Yeah. We could talk we could do a whole webinar on this, just overcoming that objection of, are we going to see a wave of foreclosures? What do we see coming in the future? I think we will start to see, more and more information being published on 2021 projections. Price appreciation, I'll bring that to you when we start to see that being published. Price appreciation going on in the next 12 months is all very positive. But let me position that statement real quick. Experts have had a tough time this year saying what's going to happen next month. Not a lot of people saying what's going to happen 12 months from now. They're like, let's kind of get through with what we got here, and then we'll figure that out.
And there's always something. There's always a paradigm shift. And I think the way that technology is moving so fast, we kind of touched on this before we went live. There's a paradigm shift coming. What does that look like? I don't know. ICE, the international exchange, they bought Ellie Mae for $11 million. Proppy is starting to get a lot of attention, and they're kind of a blockchain an end-to-end system. So there's some paradigms out there that could take all the norms and throw them out the window, right? And we're in unprecedented waters right now. So yeah, we can't even tell you what's going to happen next week.
That's very true, man. Very true. I always say, look, when facts change, my opinion changes. So
Right. Well, it's we talked last time about there's still a significant number of people that have not put their home on the market because they're concerned, they're scared. And I'm not saying that's not legitimate, but as more information in the future comes out, we'll see more people put their home on the market, and that's what we can't give you is tomorrow's news. But I think we can look to the coming year and coming time as that information coming out and getting more, forecasts, things like that from experts on what next year will look like. But as far as price wise, which is going to, again, be dictated by supply and demand, it's all very positive going into next year.
Yeah, I see that. I see the same thing. So very, very happy. David, Johnny Mo, thank you so much. I can't wait to do this again 2 weeks from now, because I think we'll have more solid numbers with those bigger companies, and we'll start seeing some projections based on that, right? So,
yeah, I think you can look at that, and hopefully we'll see folks continue to get jobs back, which is what we've seen for the last several months, and I just want to see that continue to improve.
I love it.
Is
Thanks,
there
guys.
another question in there, or were there? Okay, we're good.
No, we got it. It looks like it didn't even completely come through, so don't even worry about it, David, Johnny Mo. Appreciate you guys, and make sure you go to Keeping Current Matters. They have that free blog. So thank you again, David. You're with KCM. We appreciate you. And Johnny Mo, he's got what is this? My Town? Is that what it's called?
Explore My Town. Yeah.
Explore My Town. Take a look at that. And obviously, he's a moderator admin at LabCoat Agents. Thanks, guys. Appreciate you.
Stay safe.
Thank you. See you guys.